Success is the sum of small efforts repeated day in and day out. Robert Collier. And Mr. Collier is all about what we're about. 10 to 15 minutes a day, every day. Small efforts repeated day in and day out. If you want to learn how the market works, if you want to be able to follow stocks and ETFs accurately, that is what we do here. We do it based on very simple formulas, very simple layouts on simple charts, and it works time and time again. Is it perfect? Of course not. No charting, no technical analysis is always perfect. But when you follow us and you watch and you see time and time again how it works, and when things don't work, minimize your losses, jump out, and wait for the next successful trade. But it takes a small effort day in and day out. So we want you to be with us 10 to 15 minutes. That's all we ask. You're listening to the comprehensive review and forecast for the week that's ending the 15th of November. Let's jump into these charts. Our second full week of up movement after the weekly vertical crossover back on the week ending the 1st of November. Our jumping in point somewhere around that last number of 304. How high have we gone? 311.84 in 2 weeks, 10 market days. Not even 10 market days, 9 market days. Remember, we had a holiday. Is that not beautiful? And is that weekly vertical crossover not beautiful? Of course it is. Derivative oscillator heading up, price percent oscillator heading up. Go from the weekly chart to the 2-day. We see the 2-day. Now again, we had that end on Wednesday, so this is another completed candle representing Thursday and Friday. And we see a higher high, and we see that the candle body itself is higher. Price is above the weekly trend line. So I'm sorry, the 2-day, well above the weekly too, well above and above the 2-day trend line. Go to the 4-hour chart. What do we see? See a nice big up candle in the morning, followed by a further up candle in the afternoon. What do we have going on? 0.73% gain for the day. And of course, we see the 4-hour chart crossing back over. What did we continue to tell you over these last few days with this sideways slide? Where was the big trend? All things being equal, market tends to move in the direction of the largest chart. And that is the weekly chart. And guess what? Heading up. And again, kept going. That weekly chart stayed strong. 2-day chart got a little bit weaker on us, but again, continuing to move up. And we see that happening again. So ended the week nice and beautiful. Where are things? Well, the weekly is still strong, and the 2-day as we go into the next week is decently strong also. Looks good for continued up movement on the S&P 500. What do we see on the NASDAQ 100? Up for the day also 0.73%. My charts just told me 0.72% on the S&P, 0.73% on the Qs. Going through the 3rd week of strong up movement after the weekly vertical crossover. Somewhere that last number 293.80, something like that, which was the jumping in point at the close of the day on that Friday, the 25th of November. How high? 202.91 in 3 weeks. So 193.80, almost 194, up to a high of 202.91, almost 203. Is that pretty good? $203 after 3 weeks, starting at 194. Not bad. Not bad at all. Again, the magic of the weekly vertical crossover. Price percent oscillator heading up, derivative oscillator heading up. Successful practice trade so far. I know some of you jumped in on that Friday. We're out by Monday with decent practice gains, virtual gains. Hey, those of you who stayed in, more power to you, my friends. The trick is to win. Don't doubt yourself when you win. Yes, you want to get the maximum you can, but again, there are costs always for staying in. Those of you who jumped into a practice options trade and made 20% up and out, that's fine. Those of you who now have made 2, 3%, whatever, and you have your profit limit set on your good till canceled sell order, and you pull out of that practice trade when that's hit, That is not a problem at all, my friends. What do we see on the 2-day chart? Price above the 2-day trend line, a higher candle body, higher candle wick, price above the 2-day and the weekly. That is good to see. Look at that 4-hour chart. Hasn't crossed over going up yet, but strong up moves in the morning. We can see prices above that 2-day trend line on the 4-hour chart. Derivative oscillator still negative. So is the price percent oscillator. We'll just keep watching, waiting, see what there is to see. And again, as you step back, you see that your 2-day is decently strong and your weekly chart is decently strong. Now, one thing I have pointed out to you guys before that we were actually paying attention to is when things peaked out in the market back where we had that really high of the price percent oscillator, we still have a divergence there. We've reached higher highs. Price percent oscillator, however, has pulled back significantly. We didn't reach a higher high actually back on the week ending the 26th of July. But again, the derivative oscillator was higher. I'm sorry, the price percent oscillator was higher at that point too. So we do have a divergence underway. What does that mean? Well, it means continue to pay close attention. You see the same thing on the S&P 500. Continue to pay close attention to where stocks are. And again, these indexes represent baskets of stocks. So again, just continue to pay attention, realizing that divergence is at play. And it means some inherent weaknesses there, some inherent concerns in the marketplace. Now, we're going to leave stocks, go to 20-year bonds, 0.11%. TLT was down for the day. How did we end the week? Well, we didn't reach a lower low from the prior week. That's a bit concerning. Price, however, is below the weekly trend line. Price percent oscillators nonetheless still heading down. Derivative oscillators losing some downward momentum. Go to the 2-day chart. We can see that it's heading up. That 2-day chart is heading up. We have a 2-day green up candle pushed through the 2-day trend line below the weekly trend line. So again, pullback we have seen there. So the 2-day chart is weak. Weekly chart is still strong. So again, when we go to where things are on that 4-hour chart, we can see that it appears to have peaked out on Thursday and has sort of moved sideways again, down for the day, 0.11%, just barely down. Price is below the weekly trend line, above the 2-day on that 4-hour chart. So we're seeing some weakness in the 2-day chart. 4-hour chart also still heading up. And that weekly chart, however, when we look at that, and that is our strongest, biggest chart, is still decidedly down. So the overall mood of bonds is down. Remember, we had that weekly vertical crossover going down back on the 27th. Didn't have a jumping in point until that 2 weeks later. During that week, I believe it was on the week of the ending the 11th. We can actually go back and check that. We'll go back and take a look. When we saw, yes, we had things crossover going down actually back on the 9th. That is when we saw, that was on Wednesday the 9th, and then we had our jumping in point Wednesday afternoon. That is where, after we had things track up for quite a while, for many days, until things rolled over there. So again, keep your eye on bonds. There is some inherent weakness potentially in that down move. So just watch that 4-hour chart. If it crosses back over and gives you a jumping in point going down, you can, of course, practice trade TBF, Tango Bravo Foxtrot. That is the ProShares single inverse of 20-year bonds, and it will, of course, go up as it has over the last several weeks while 20-year bonds are going down. If you hadn't taken our training on inverse funds, please make sure to do that. It is available for you. I'll attach it at the end of the video today. If you're listening on audio, just go to our YouTube channel and put in inverse. Look for inverse funds, how to make money when markets crash. Great training there for your practice trading. Now, lastly, we go to gold. Gold was the biggest downer for the day, down 0.25%. What do we see here? Well, we see that we have a strong red down candle. The price is continuing to move down. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Prices below the weekly and the 2-day. We go to that 2-day chart. Take a look. We can see that the latest candle on the 2-day chart sitting right there it's a green spinning top, indecision tending up. It is a green open box candle, so that's stronger up move than a solid green. Remember, the solids go with down moves, the open boxes go with up moves. Even when it's a red open box, it's just showing you some slowing of up moves. If it's a green down box, showing you some slowing of down moves. So we have a green spinning top showing us indecision tending up, sitting right there on the 2-day trend line. Price percent oscillator still heading down. Price below the weekly trend line. We go from the 2-day chart to the 4-hour, and we can see where things ticked up on the 14th and then really sideways on the 15th. We see that the price percent oscillator on that shortest chart of all is heading up, and the derivative oscillator gaining upward momentum. So what are we paying attention to here? Well, over the course of this next week, we'll watch and see if indeed we have a crossover going down on that 4-hour chart, which will give us potentially a jumping in point for more down moves on gold. If it doesn't cross over going down, then of course you don't need to get into it. So watch that closely. Same thing with bonds. Watch for a crossover going down. Again, things continue to move up when we look at the Qs and at the NASDAQ 100. So that is the NASDAQ 100, sorry, and the S&P 500 as represented by SPY. Beautiful to see things continuing to climb. Folks, that's where we are as we end the week. We've got some special trainings for you, one that we just produced yesterday that you will see in your show notes for those of you who subscribe. Beware of confirmation bias. Very much want you to have that. Plus, we have a great training we're going to be putting out on Monday for you that deal with profit and loss bands. These are horizontal bands. We've talked about them some. I got a great training I'm going to launch on Monday for everyone who subscribes at chartingwealth.com. Do that for free. Go there, put in your name, email address. You will receive it with the Monday broadcast. So you have the weekend to go ahead and sign up. Please don't hesitate to click that subscribe button on the lower right hand of your screen. Those watching the video, subscribe to our YouTube channel. We so appreciate that. Those listening to our podcasts, thank you for joining us. And again, if you don't have our book, that is Charting Your Way to Wealth. And it's 13th printing, if you can believe it. We have an autographed copy for you. Follow the link in the show notes to purchase that book. If you live overseas, then simply email us, cw@chartingwealth.com. cw@chartingwealth.com. We'll send you a PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. If you're not a Patreon supporter and want to help underwrite the costs of what we do here, we would sure appreciate that. Lots of super special training for you, including short chart training, long chart training. That is our quarterly chart training, along with Bitcoin training, monthly question and answer session for all levels of support, all 3 levels, and all sorts of other goodies. Depending on your level of support, you can get a year's supply of our Stock Traders Journals. That helps you keep up. That has daily market worksheets, weekly market worksheets, and trade worksheets all bound together in a 3-month supply, a quarterly supply. You get 4 of those. And of course, depending on your level, you can get a free copy of our book, Charting Your Way to Wealth. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.